Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, May 1st, 2024. I am Frank Ochoa, aka PivotBoss. Happy Hump Day, everyone. It is also Fed Day. Today we get another FOMC statement and rate decision and the press conference that follows, in addition to some opening economic data at the beginning of the day, including ADP non-farm employment change, which came out here a little while ago. We also have ISM manufacturing PMI and things of that nature, crude oil inventories. ADP non-farm employment change came out at 192K versus a 179K estimate and a revised 208K from last time around. Now, currently the market is currently seeing a very, very narrow range of price action here heading into the RTH Open. That's very normal on the morning prior to the afternoon's Fed statement and rate decision. But the previous session, quite a bit of selling pressure. That is quite out of character here for a day prior to the Wednesday there. Big time selling pressure, stop run day. Heavy continuation even into the afternoon. That was a pretty big lick of selling pressure there, and it is another indication that we could be headed for new lows yet again after this recent bump higher. One of the things we mentioned before is after all of the selling pressure here, any rally that comes after it, even if it's a pretty strong rally, could be a rug pull down the road for another round of selling pressure and new lows ahead. This could be day one of the new lower high here. That high coincided exactly at the previous month's midpoint. 51.48 half was yesterday's high. That's also the previous month's mid. It went offered straight away in after hours pre-market trading, and then again throughout the session to close much lower, 100 points lower. That's a big time move right there, with the potential here to see more weakness ahead. Now again, we could see a little bit of range bound action today and compression, but later on this afternoon that could change with more increased volatility right around 1 o'clock p.m. Central, and especially 30 minutes later at 1:30 p.m. Central with the press conference that follows. Any pullback into the lower value relationship on the new monthly pivot range could be sold for another round of weakness here as this market attempts to go retest the recent lows at 49.63 half and likely continue even lower. Unfilled FOMC key level below at 49.13 half could be the next key level target down below as well. If we take a look here at the NQ, you'll see the NQ looks very similar in its selling pressure in the previous session. A high range day, over 400 points of range the previous session. Big time selling pressure even late in the day. This thing also closing below a lower value relationship here for one pivot range to the next month's pivot range. That usually means any pullback into that range is sold for a continuation down and a push into new lows. 17,113 is the previous month's lows. We could be looking at taking those out up ahead. So we could be looking at a continuation down, perhaps 16.8, or even down into the 200-day moving average, which would be right around that 16,460 level. Could be ahead. So this market right now teetering on the brink here of more weakness up ahead. And again, right now, very narrow range of price action heading into this afternoon. We could see a little bit more back and forth price action, but eventually we'll get some volatility here this afternoon. With the lower value relationship, you see the previous month's close here. The tendency is any prices above the previous month's close tend to be a trap for a rotation back down and new lows up ahead. Breaking the previous month's midpoint and pushing through that level would break this relationship. Alright, taking a look here at crude oil. Crude continues to see a dose of selling pressure itself. The previous few days here, big time selling pressure, especially after this lower high. A continued lower high pattern, continued selling pressure. We've now seen price take out the previous month's low, which is also right at the previous week's low. And this market continues to show weakness here with a higher value relationship for the monthly pivot range, but a lower close. That's a bearish bias on the close. And again, any pullback into the pivot range could be seen as a selling opportunity for a continuation down. So right now, the path of least resistance has been down for crude oil. It is approaching the $80 key level here, which hasn't been tested since the day that it saw a break through that level back in March. And we're coming up to that point here. A retest of that level could lead to a little bit of strength, but again, this has been a market that just hasn't wanted to go up here lately. A failure at 80 could start to lead to more weakness ahead. Flipping the page to gold. Right here, gold has also seen some weakness here as well. I mentioned before that there was this very nice narrow range that could lead to a nice breakout move of about 100 points at the very least. And the break was to the downside. This thing broke to the downside yesterday. Very aggressive sell-off day of over 50 points. And you can see kind of a rounded top behavior here and breaking right around this 2320 level. And that right there, is that an indication that we could see a little bit more weakness up ahead? Or is this one of those false downside breaks that lead to a surprise rally up ahead? Right now, any pullback into the pivot range, which right now is kind of like crude oil. It's a higher value relationship, but with a bearish bias. That would tend to suggest that any push into that level could be sold for new lows ahead. And a break of 2350 is what would open up more upside. So that 2350 is going to be very important. And as of right now, any pullback into that zone could be a selling opportunity for more near-term weakness up ahead for gold. The overall trend remains highly bullish though. Very bullish. Even if we do get some selling pressure, 2250, does that become support? We'll see how that plays out, but right now any strength could be sold until proven otherwise. Lastly, looking at the YM. The YM in the previous session, heavy selling pressure, a big downside break, stop run day through 2-day lows, and is now sitting right on the lows here of the prior weeks, other than that major sell-off that happened overnight. That is the next tail to go swing through. You can see this is that day's midpoint right here, and we're right at it. So this is a big time zone of support at the moment. 37,800, a big time level. We're about 140 points off that level. A failure here and you really start to open up some downside. It's already got a very clear downtrending market that's in play. And the previous session selling pressure here really intensified that lower high. Any pullback here again could be an opportunity for bears to defend for a continuation down, as this market looks to approach the previous quarter's low price. Previous quarter's low right there at about the 37.3 level, and again any pullback could be an opportunity to sell it into that level down below. Again, we do have Fed this afternoon that could provide some late day volatility. Thursday after Fed tends to be a high range day as well, and then NFP Friday could provide volatility prior to the RTH Open heading into Friday's trading. So we could be 4 days of heavy volatility here for the most part this week, with a downward bias as of right now, unless something dramatically changes this afternoon during the Fed. Alright, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.